Alright guys, Bitcoin just broke to the downside of this rising wedge that has been forming for multiple days, and it could get a lot uglier from here. Let me show you. So over the past few days, Bitcoin has been forming multiple swing failure patterns and liquidity sweeps above the highs. Every time price pushed above, it couldn't hold and got rejected back down. And if you've been watching the previous videos, you know we were pointing this out in real time. And what was happening alongside every single one of those sweeps? Bearish divergences. And if we open up the RSI on the 1 hour time frame, price made a higher high, but the indicator made a lower high. On the 2 hour RSI, same thing. And on the 4 hour RSI as well. So bearish divergences on the RSI across 3 time frames. And it wasn't just the RSI. If we open up the MACD on the 1 hour, bearish divergence right here. And even on the 12 hour MACD, there was a hidden bearish divergence forming. So we had bearish signals on essentially every time frame, all lining up at those highs. And if we open up the liquidation heat map, you can see exactly what was happening. After every top, liquidation started building just above it, every single time. And because price mostly moves the way to reg the majority, Bitcoin swept that liquidity every single time before getting rejected. And hopefully you watched yesterday's video because we called this last move exactly. We said the liquidity is building once again just above the recent high and that Bitcoin is likely to sweep it one more time before getting bigger rejection. And that's exactly what happened. Bitcoin swept the liquidity, formed one more higher high, while the RSI formed a lower high. And price dumped. Now I have something very interesting to show you, but before that, if you guys are finding this helpful, make sure to like the video, subscribe to the channel and turn on notifications so you don't miss the next one. Alright, let's get back to the video. Now even though we just saw this breakdown from the rising wedge, there are actually some bullish signs forming right now. If we open up the RSI on the 1 hour time frame, what you're going to see right here is a bullish divergence. Price made a higher low, but the RSI made a lower low. If we zoom out to the 2 hour RSI, same thing right here, another bullish divergence. And on the 4 hour RSI as well, price higher low, indicator lower low. And again, it's not just the RSI, if we open up the MACD on the 2 hour, there's a bullish divergence forming right here as well. And on the 4 hour MACD, same thing. So we've got bullish divergences on the RSI on 3 time frames and on the MACD on 2 time frames, all lining up right after this dump. And if we look at this chart right here, you'll see that in 2026, the start of the week brought the best returns for Bitcoin by far. Monday is the most bullish day of the week. And guess what day is tomorrow? Monday. So bullish divergences across multiple time frames, plus the strongest day of the week coming up. That's definitely something to keep in mind. Now if you watched the previous video, you know I showed you this WXY pattern that Bitcoin is forming. And we said it has higher targets, but we expected a retrace first because of the B wave. We also pointed out 2 important levels for this retrace. The CME gap and the anchored VWAP at 69.5 thousand $US and the liquidity lower that aligns with the golden pocket at around 67.7 thousand $US. Now let me show you something insane right here. The Y wave, as we talked about, is made out of 3 waves, A, B and C. And the A wave is now likely finished. So we are currently in the B wave. But here's the thing, if we look inside the A wave, it's actually a 5 wave impulse. So let me count it out. Starting at the bottom, 1 right here, 2 right here, 3 right here, 4 right here, and 5 right here at the top. So that's the complete impulse for the A wave. Now as you know, after a 5 wave impulse, you get a corrective move. And the corrective move is going to form our bigger B wave. So we start at the top, this current retrace could be our A wave of the correction, then a potential bounce into wave B and the C ends lower. Now let me pull up the fib retracement and measure this A wave of the correction. If we drag it from the top to the bottom of this retrace, what you're going to see is that golden pocket comes in at around 72.6 thousand $US. So if this here is the end of the A wave, our wave B of this correction could end right here. A bounce up to 72.6 thousand $US and then back down for the C wave. And now let me take the fib extension. We measure the whole A wave of the correction and put it at the potential B wave ending at the golden pocket at 72.6 thousand US dollars. And what you're going to see right here is that the 1-to-1 level aligns perfectly with the CME gap and the anchored VWAP at 69.5 thousand US dollars, and the 1.618 level aligns perfectly with our liquidity level down at 67.7 thousand US dollars. So both of the levels we mentioned in the previous video as major targets are now being confirmed by the Elliott wave count and the fib extension. That's a lot of confluence. So that's where we are right now. A rising wedge broke down, bullish divergences forming for a potential bounce, and the Elliott wave count is pointing at 69.5 thousand and 67.7 thousand US dollars as the major B wave targets. As always, this is not financial advice and manage your risk. Let me know in the comments what you guys think, and I'll see you in the next one. Bye bye.